Hi, I'm Bair with Pacific Sotheby's International Realty. We understand that there's a lot of information, some true and some false, about the housing market as well as the interest rate. And a lot of people want to know how they need to qualify in today's market. But with that being said, we have an awesome special guest today with San Diego Funding, Melissa Howell. But before we get started, I would love for you to like, share, and subscribe. And do not forget to hit that notification bell so therefore you know the next time a video is posted. So let's get started.
Hi.
Hey, you look good.
Oh, I did it this morning.
Look, I wake up the same way. I'm just like, no face, and I put on my face.
One thing about working at home is you can roll out of bed at 6 and
and not worry, right? Nobody's going to judge you at home. But thank you so much for joining us today. Yeah. So how what have you been up to other than, of course, working?
Yeah, working is really it. It's been very busy. A lot of people are refinancing, and we have actually a lot of purchase business right now. So it's been very good.
Good stuff. That is so good to hear, because, so many people are saying, just emailing or texting saying, I'm so scared because since the pandemic, we don't know what to do. We were really looking. Now we're scared. We don't know if we want to actually walk in home. So I'm just like, the world goes on. As long as you're doing the things you're supposed to do, washing your hands, protecting yourself, covering your face. Protect yourself. You'll be okay, Like, no need to worry. People are still shopping. People still need homes. And the world.
I understand their fear, but I think as long as you're careful, it should be okay. Before all this started, there was a lot of people that were out looking for properties, and there was multiple offers. I had a lot of buyers that they were outbid and, weren't getting properties. And now a lot of those buyers are going in, and instead of having 10 people making offers, there's only 2 or 3. And they have a much better chance of getting it at a good price. So, if they're working and they feel secure, they're moving forward.
That's super, super, super good to hear. Well, with that being said, I have a few questions that I wanted to ask you. We're getting a lot of, questions and people asking us why some rates are not advertised in the media. How do you suggest that we respond to that and give them the right information and lead them in the right direction?
Well, media is always going to put the lowest rate that they see out there. And how that works is if you have a loan amount of 510 or under, those are the loans that are going to get the 3 to 3.25 rates right now. As long as you have good credit and you have, a good down payment, that's the rates that you're hearing about on the news. Those are the more attractive loans. They sell quicker on behind the scenes. So those are the rates, they get the best rates. When you go over the 510 up to the 701, 500 loan amounts, that's called high balance or higher conforming. And those are considered a little bit riskier on the back end. So those are priced a little bit higher. So that's when you're seeing the 3.3, 3.5s. And that all has to do with the loans that right now what's going on is because of all the forbearances that are out there, people not paying their mortgages, the banks aren't receiving as much money as they usually have. So they don't have as much money to put back out there for new purchases, new refinances. So they're being more particular about the loans that they want to purchase. So what they do is they make some more attractive with a lower interest rate and some less attractive. But still, 3.5 in the grand scheme of things is a great rate.
Great. Now, question, when you say 500 to 10,000, so anything over 510, 400, the rate changes to approximately
it's higher, like 3.3 to 3.5.
3.3 to 3.5. And then is it like a limited, let's say, is there another step after that? Like
after 701, it's considered a jumbo loan. And those are pretty difficult right now. And we would have to say we would consider it on a case-by-case basis. If you're over 700, then the jumbo lenders have really, a lot of them have pulled out of the market because they're scared and they don't want to take risk. So we're doing a lot of first and seconds. So we're keeping people in the conforming territory with a $700,000 first and then a small second. Or, depending on their file, if they have good credit and they have a lot of reserves, they have a good down payment, the jumbo loan might be fine. So it just depends on the file. Right now, good credit and a lot of reserves is what's making the files a lot stronger and investors picking those files.
Good to know. So when you're saying good credit, like what's a good credit score? To have now?
To give you an idea, I used to be able to do FHA and VA with as low as a 580. But right now, lenders most across the board have changed their limit to a 680. So that's, you really need to have a 680 or above for today's market. And that will change as things ease up, that will go back down. But right now you need at least a 680.
Right. And then just to backtrack a little bit when you're saying forbearance, because a lot of people are getting confused with this 3 months forbearance. They're thinking that, you know, I can skip out on those 3 payments, not understanding that those 3 payments are going to have to be paid by month 4 all at one time. And like a lot of people are, I don't think they're understanding that, you know, they're not getting a break. They still have to pay that, just not right now. So can you better explain like how most banks are handling that?
Well, every different servicer or investor is going to be different. So what we're telling people is it's really, really important to call and find out what your particular lender is doing. Some people are just skipping 1 payment and they're trying to save up in that month to make that 2nd and 3rd payment. You know, sometimes skipping 1 is enough for them to get by to the next month. Some lenders are saying, yeah, you can skip 3 months, but you're going to owe it on the 4th. Some are putting some mortgages at the end of the mortgage, so you truly don't have to pay it until the end of the mortgage. So every servicer is going to be a little bit different. But we're highly recommending that if it's possible, you make as many of those payments as you can.
Right. Okay. And I mean, that's just, I've been telling everybody, like, if you can afford to do it, do it.
Yes.
Get it out of the way, because the last thing you want is for that to come back on you. Then you have to pay this big lump sum. Let's say if you have $3,000 mortgage and you have, you know, 3 months, you don't want to have to kick out that $9,000. Well, it'll be 12 by then because it'll be month 4, but you don't want to have to kick all of that out at one time, you know?
Right. And, you know, it's planned in a typical mortgage that somebody might have a struggle to miss 1 payment. So it's not that big of a deal to miss 1. They'll usually just tack it on the end of the loan. It's when you have to miss more than that it becomes a big deal, and they have to restructure, and that every servicer is going to do that differently.
Oh, good. Okay, so the next question that we had is, why are VA and FHA loans not currently priced as well?
Well, if they're under the 510, then they're going to be priced well. It goes back to the higher over the 510 FHA and VA. And this has to do on the back end, which is a little bit harder to understand. But when people that are buying those bulk of loans on the back end, they're just not as attractive to them, because they could be paid off sooner. If people refinance, then they risk losing that money. So they're just not as attractive, and they're considered a riskier loan. So what we're recommending for people that are over the 510 up to the 701 for VA and FHA is that they get a seller credit to help them pay the points to buy down the rate.
That's a good point. So to get seller points.
Yes, I have one right now where I was able to get them a 3.125, and they had to pay 2 points. So we have the seller paying the 2 points. And right now the sellers are doing it.
Yeah, that's good to know, because the sellers are, I mean, they're so eager to sell their home just as much as someone is eager to buy their home. So they're willing to pay those points so that they can get their home sold and get new homeowners inside their home. That's good. That's really, really good. because we work with a lot of VA loans, and it's just, they're just so scared right now. And I'm just like, don't be scared. We have the experts. We have the right people, you know, lined up for you. Just let's get the right information, so therefore it takes the fear out of it. You know?
And that's what, you know, FHA and VA right now are going to be very much credit driven. So if that's the first thing we do, is if they're VA or FHAs, we look at their credit to see if there's something we can do to improve it right away. We have programs called a what if, where we can put their credit into the system, and it will tell us, if we pay off this credit card, pay down this credit card, your credit score will go up to this. And we can give them options, and then we can do what's called the rapid rescore. And immediately within 3 days, we can get them to have a higher credit score. So there's different things to do to get them to a place where, you know, they might still have to pay a point and a half, but, you know, working with the seller, it's all doable, and they're still getting a great 3.125 rate, you know, and a great loan.
Right. That's like amazing just to know that, you guys have programs and things set up. So, just because you don't qualify today does not mean, in May that you won't qualify come July, August, September. If,
Absolutely.
you take care of certain things on your credit report, it'll boost your score right up. So that's like valuable information.
And we're even helping people put together budgets, and along with fixing their credit so that they can save, to get in a position where in 3 to 5 months they are in a better position to buy.
That's super good. Oh my God, Melissa. I'm in awe because that's like such good, just to know that it's somebody out there, it's people out there to help you. And like yourself, SC funding is like great because they have system and programs and everything set up to make sure that you're not left behind if you want to own a home, So,
right. Absolutely.
Yeah. The next question is, what can borrowers do to secure the best interest rate in today's market? I think that's kind of what we just discussed, getting their credit ready, but
yes.
What else can they do to get themselves prepared?
The best credit score is going to be with the higher credit. The best interest rate is going to be with the higher credit scores, the more money you can put down, and they're going to be looking for a lot of reserves. So I have one in particular right now where they didn't quite have all the reserves that they needed, but we still wanted to do 10% down. So we got a gift from their parents. And so they're putting 10% down. The parents are paying the closing costs, and then they can conserve their cash for their reserves. So, we are really, putting, you have to kind of fit each person into the different loan product, but we're making it work, and we can definitely help them to get the best rates.
Right. Now, when you say reserves, everyone doesn't know what that means. So you're saying as a 401k, as you said, a gift from a parent and things like that. So
okay. A reserve would be money in their bank account or a retirement account, not necessarily a gift, but money that they have already had that they can use in case they do get in trouble to make those payments. And that's going to make their file more attractive to an investor.
Okay. See, that's good to know because like having a 401k, you can use that to say that you have that extra cash, although you don't have to pull it, but you just have to show that it's there just in case times needed, and you have to be able to pull to, I guess, pay your loan or pay towards your loan?
Exactly.
Okay. Perfect. Now, are jumbo loans still available? You did touch that a little bit earlier, but I just want to specify, are they still available?
Yes.
Although I know there's a little bit more restrictions on them because they're so risky.
Yeah. They're we're going to need a lot more reserves than we used to. They're requiring higher credit scores. They want larger down payments, but we are still doing them. But like I said, a lot of times if we can structure it to where we're doing a first and staying in the conforming of like 701, I just closed one where we did a 701 first and a $300,000 second because they were going to sell their home. So instead of doing a jumbo loan, we just did a first and second. And then when they sell their other home, they're going to just pay off the HELOC. So, there's definitely ways to make it work. And, but there are still jumbo loans out there.
Good. So this is a little bit on topic but off topic because I do have someone that asked me, they sent me a certificate of their eligibility for the VA. And so their thing was because their VA was compromised. They had to move and short sell their home into their job. So they had to move whatever. And I guess their entitlement charges was $75,000. So they're trying to figure out if they want to requalify to use their certificate of eligibility from the VA. What do they need to do and to, I guess, have that loan or that, that reinstated for them to use again?
Okay. Well, first thing they need to do is contact VA. Depending on the situation, sometimes in very few cases, but sometimes depending on the reason they had to short sell, they could work out something with VA. Otherwise, they would have to pay off that loan to get their VA eligibility restored. So in that situation, what we would typically do is try to find them a different loan product with minimal down.
Right. So whether they was going to FHA or something like that, they could just try a different option.
Or conventional 3 to 5% down, depending on how long it's been since they've owned a home, what loan amount they're going to, that type of thing, and what their credit scores are. Credit scores for really the low down payments between conventional and FHA is going to be what their credit scores are. If they have high credit scores, we'll probably just go conventional because their PMI will be less.
Okay. Because yeah, they're really interested in getting a home, and I'm just like, let me speak with my lender to see, you know, what direction we should go. And then of course, you know, we'll all get in contact and let you actually speak with them, because it's like, you know, I don't want to lead them in the wrong direction and tell them the wrong things, because it's, you know, it's a VA, and they're a little bit more easier forgiving and, you know, lenient. So it's just like, I didn't want to give them wrong information, but it's good to know that, you know, it's options where they may not have to pay all that back right away. Just depends on the reason why they had the short sale, like you said earlier. So that's really, really good to know. So contact the VA. Just have them contact someone there first and figure that out. And then we can actually sit down. Well, you can actually sit down with them and have a discussion or give them other options.
Yes, absolutely.
Okay. Awesome. Well, thank you so much, Melissa. I appreciate you being available. This is so much fun. I appreciate you like taking time and like helping us and giving all our viewers more information so they're not scared. There's no reason to be scared right now. And I keep telling them, no reason to be scared.
There's not. Yeah,
just be cautious, be careful, and keep going, you know? So it's just like,
there's a lot of loan products out there. We can find something that will fit them.
Right. Well, that's so good to know. I am so grateful for you and SC Funding for being available and having all the resources that we need to make sure we give all our clients what they need. So I totally appreciate it.
Absolutely. We will take care of your clients.
I know you will. Always.
All right.
I will talk with you soon, and thank you.
Take care. We'll talk to you guys soon.
You too. Stay safe.
Bye-bye.
Bye.